Hi, good afternoon, everyone. Talking about the trade that I have currently live. Okay, so I had taken a straddle in the morning. So let's just go over the initial trades. There has been a total of 34 orders. We started the day with 51,300 straddle, and then in the down move, the calls came closer. So for a while, we were in inverted strangle, then again a straddle, then again inverted strangle, and then straddle, and eventually again an inverted strangle. So I think almost we had 5 adjustments so far. I have to talk about the PNL here. So this is at the beginning, right? So there was a decent decay to start the day with, and then when the move came, we touched almost negative 30,000. From there, uh, slowly our graph is going up. We had touched upwards of 55,000, which is more than 1% of the capital deployed, and then currently trading around 35, 30,000 the current game, and we've not crossed 900 quantities so far. So I will take some more quantities as we have another 5 lakhs to take the position. In order to do that, what I'm going to do is I'm going to basically 3 points, sell 90, and our hedges will be roughly at so 800 points around 800. I'm going to add hedges as we go in the position and we get the position. And so adding 90 quantity here, 3 rules. That's it. I'll add more quantity. Then there is a spike in the position. Looks like we got one at 71. We may get some more at 74 and 77. Similarly, on the put side, we've created where it is now at 73, 76, and 70. And the same as on the position right here. So I have to add here. Banknifty. These are my actual positions. Have some extra hedges here. Margin is not much better. And 9. We are under 50 lakhs. That's all. That's a 990 quantity is what we will be selling today. So I have a price check of 111, which is basically to make sure if market moves, which I'm going to make it as 103 now. what it is now. Leave the price difference on with 50%. value will not give you the actual picture because we are in inverted triangle. So if you actually want to look at the current value, you should just ignore one. Right? So let's say the current value is not more than 70,000. Right? The maximum it can go is 1,20,000. Not just because we are in the money in one of the leg. That's why it's not a true. We can't make 1,23,000 because if one goes to zero, the other will be 50. Not possible that both can go to zero. So I'm never reading where the market will close, right? All I'm doing is I'm trying to balance the position. I'm actually not actively looking at the screen, right? So the reason I'm inverted right now is if the market stays between 21,200 and 21,300, I don't have to make any adjustments, and the premium on the other side will compensate. So if it is between 21,200 to 21,300 anywhere, the total points that I'm capturing right now is 113, sorry, 127, right? So which is the same if I was in a strangle. So I'm capturing 27 points because the intrinsic value is 100. The total points that I'm capturing is roughly around 27, 28, right? Between 27 and 28. I could do the same through a normal strangle. Now I'm more comfortable doing inverted, and the reason being the market moves in one direction, the other side will be able to compensate it to a very large extent. So a strangle is also going to give me 27 to 28 points, and an inverted strangle is also going to give me the same amount of points. But my risk is comparatively lesser when I'm doing inverted because the other side will be able to compensate it to some extent. So let's say if there's a 100-point move on the upside, the puts will compensate to a large extent, and I have checks in place where the put will the call will risk off after that other side is not able to compensate that much. Right? For example, now this should become 98. So that's basically same as a strangle, the number of points that I'm capturing, but with a slightly lesser risk. And I don't have a view where the market is going to close. Right? I'm just managing the position through the points that I can see existing. Uh, Nageshji, let me know if that answers your query. So 98, right? Right now we are at equidistance, right? So roughly both are around 65, 65. Just for the sake of simplicity, let's say 60, 60. Right? If the market moves upwards, when the call starts spiking, to some extent the put will give up. Right? But after a while, puts will not compensate. Also, what I'm looking at is what is the next strike at which the adjustment will happen, and I will move to that strike. Right? So when this is around 98, right, roughly this should be around 35, 30, not 35. I think this should touch somewhere around 30. And at that point of time, my puts will also be around 40. And so that's the reasoning that I will only adjust when the other side is not able to compensate to a large extent, and then moving to a straddle makes more sense because the ATM straddle price of both the legs will be close to each other. That is the main reason behind 98, right? So roughly 30 points is what we're saying, right? If so, when will that 30 point happen? Is mostly the IVs are also quite low, right? So IVs are roughly around 15. So not expecting a very large swift movement. So if we have to look at the IVs as well, to I have to go to option chain and look at the Greeks. IVs are under 20, so not expecting too much of a movement. And so usually the other side will compensate. If I was expecting a movement, right, or at least if I was expecting a lot of volatility, then that value will be slightly higher. Because I don't want to bring my position into a straddle very fast. I'll try to manage it with inverted as much as possible. And then towards the last 1 hour is where I'm okay to sit at a straddle. So just to short answer would be because the other leg will compensate to a large extent when one of the leg goes to 7 to 98. So let's say if the market goes down right now, right, you can see that the difference column. Right? So there is, I'll do a refresh when they are close to 61. So that will give you a better idea. But this is an example where the market is going down, the puts and the calls are decaying or expanding pretty much at the same levels, right? Because that's why my MTM is not moving quite a lot, is not moving a lot. After it goes to 40 and this goes to 98, right? Because roughly it's going to be around 40, like I said, right? So If the down move continues after 35 to 40 range, it will not be able to compensate the spike in the puts. And that's when I'm adjusting the puts and moving it away. And at that point of time, my puts will be around 27 to 30 range, at 25 to 30 range. So that will kind of compensate from the other side. That's the reason why it's 98. And since the market is not too volatile, I'm okay to have a lower value. If the market was very volatile, then I would rather make it 109 or 110. Because a certain reversal after that will hurt me more. So I'm basically thinking of the next step as well. No, we're not yet integrated with them. If you're interested, you'll have to reach out to your RM and request them for integration with them as well. So I'm actually not looking at the screen actively, right? I have other things that I'm doing right now. So the trade will run on its own on every adjustment. I'll come and look at it whether I need to look at changing the parameters. But so far, the way I've set up the screen is such that my settings will account for the next adjustment as well. Because I've kept a auto update of 50%. Currently, the price difference is 71. So a difference of 71 will not hit because the 98 will come into picture. So if the market goes down, the difference of 71 is not possible. Before that, the price check of 98 will come into picture and my position will risk off. When the position will risk off, I'm expecting both to be in the range of 25 to 35. And that's why my combined LTP is 50. That means that auto update will put my price difference between 25 to 35, which is making sure for the next adjustment. And so it's a stepwise process, right? So you're looking at the current one, but what happens after the current one also is through auto update. So like I was saying, 98, this should be between 35 to 40. This should be around 25 to 30. So that's exactly what should happen now if it touches 98 and stays above 98 for one tick. I'm going to make it 5 ticks. Okay, so most likely, okay, it went to 98 and came back. If it goes to 98 and stays above 98 for 5 consecutive ticks, is when the trade will adjust. And you can see that MTM swing is not too much. That's the main reason behind having a value, so such that I will adjust only when required. Most likely, what we were saying was around 25, around 30 to 35. Most likely that's going to be the case, and here between 25 to 30. So surprisingly, the puts are not spiking. Right, the put here was around 14, 13, 14. It has gone to 22. Yeah, now you will see that the adjustment has happened, and now you can see that the price difference, like I said, will be between 25 to 35. And now my position is adjusted automatically. I'm back to a strategy. Now, since I'm not actively looking at the screen, that's why this combination helps me a lot. So I've already set up auto update of 50%. I got a price difference of 31. Now the logic is most likely if a 15-point gap is on the increase in the put is, then the call will give up roughly 11 to 12. So there's a decent balance there. So my MTM won't swing too much unless there's a really big move. With the IVs currently, I'm not expecting too much of movement in the market. There could be movement, but gradually. Possible that the move comes, but the move may not be very swift. I hope this example helps understand the reasoning behind the settings. Just let me know if I should cover this again. If you have been watching, if the adjustment or the adjustment actually happened, and what was the logic behind keeping those settings. No plans as of now, sir, for Dhan. We've already working with Trade Genie, so if you are interested in trying it out, you can always open an account with Trade Genie and get a first month of your subscription free of cost. Uh, we will continue to support as the team is helping us build a better tool by working with our requirements, right? So our users give us a requirement, we work with the broker to support those requirements. Right? So it's a team that helps enable those features from the broker end as well. So as of now, no. So this is where I was little concerned, right? If there's a reversal again, then we'll have to back to that 90 inverted strangle. That's why I've increased the weight to 5. And now I'm going to increase this to 33. I'm trying to delay the adjustment. We are at a decent ROI as of now. We'll try and delay the adjustment as much as possible because I am hoping that the market is not going to be very volatile. 70, 80 points up and down is okay. Nothing beyond 150 point a minute, what I'm hoping. And I'm stating that based on how the prices are currently. That could obviously change over a period of time. I'm going to be away from the screen for minutes. Checking the settings before I step away. I'm basically saying if it's more than 150, then I'm going to square off the complete position, which Most likely should not be the case, but just to be safe than sorry. Here now the trickiness is right, because if I shift again, it's around 80 and 40. I'm gonna still keep it slightly higher. I don't want to go inverted at this point of time. I'll wait for this to happen because the puts have decayed quite a lot. We shifted it at 28, now at 17 or 18. There's a 10-point decay. A reversal will hit me quite hard because if I go inverted again, then again at 98 I'll have to adjust the position. Right? So that's why I'm going to stay in this position for until market goes or synthetic future goes about 51 to 39. That's when the adjustment should happen. Okay, it happens, it happens. Maybe market is planning to move up. That's what the price is at least telling, because the puts are decaying very fast. Okay, the adjustment happened. Now we will have the price check of 90. That's because right after the down move, there was a slight up move. We're just following the price, not. So another thing that I can do right now is most likely, because it's almost to. I can go into a triangle and then manage it from there. Bring it back to a straddle only when required. Yeah, let's do that. I'll just create a basket. This 52. This I'm gonna sell a strike which is on 300, on 200, and we're gonna buy on 200. This is the combination, and we'll do that for 990. A single click will move positions from where we are currently to. Yeah, let's do that. Okay, so the position has been shifted. All the four legs have been executed. Now we will look at refreshing it and setting up a price difference of 30. Good enough. That's a, because I'm not in front of the screen, I'd rather take a slightly less risky approach, and we will adjust when this goes to forward. Now I'm far off at 11 points. Yeah, this is much better. I don't need the price check, only need the price difference with an auto update when the adjustment happens to 50. Right now we've left it at 40. With the margin we're using under 50. Enough. At this, we will end up, if let's say market now closes and all of this goes to zero, we are looking at roughly 60,000, which is 1.2% of the capital. So there's still 1.5 hours left. So we'll have to wait and watch how the market. Okay, stepping away from the screen. for 15 minutes. Everything looks fine. My MTM PNL minus 25,000, target obviously is relevant right now, and price to term. The weight of fund. Save this. We'll see you after a 15-minute break. at the front of the system. Let's see if we got some extra hedges. Let me get rid of once. Make this 50. I don't want to because the premiums, right, one strike off, one strike away, it's like has decayed quite a lot. But if I have to move to ATM, quite expensive. So rather bring my position closer only when it's really required. Not before. What will happen with this setting is my MTM will actually swing a bit. And so I may actually go all the way down to 20,000 with this setting. Because if the down move is swift, then the problem is there. Okay. Uh, okay, so I was just showing that how is the book position coming as minus 1 lakh, right? So I was doing the math internally. Let me just here. Let's get this. You look at the closed positions, is also shown here. So the book positions are the same: 2565, 87, 73, 79, 733, and negative 1534. If you do a sum of all these, this will come as minus 1 lakh, but the open positions are plus 90 and plus 58. And so that's why the total P&L is positive 46. So all the closed positions, their sum is coming to minus 1 lakh, but the open position is also considered when we showing the current P&L. Got some extra hedges here, so my margin is roughly 44. I can look at adding some more quantity. The call side, let's add some, add roughly, hedges are what, 200 points away. Keep the hedges. The new hedges that we are adding will add some 500 points. Yeah, my hedges are actually quite close though. Hmm. This is okay. They are already hitting 215, so get 90 more at 16 and 19. Similarly on the put side, add it here at 11 and 14. Because we have some margin now since our hedges are quite close. So I'll think about adding some more. And I'm only adding it when the price is above 1150 and 1450 on the put side, and on the call 1550 and 19. And the hedges will automatically get added 500 points away when position is getting added. Maybe I'll just move the hedges up. 700 is one. Move all the hedges. Under 2 rupees is what I'm. With this, I think my just Nagesh, just let me know if it's clear on the book positions. I had a question. So we have an hour, 10 minutes left, hour, 15 minutes left, expiry now. The ATM straddle itself is around 60. The market has been okay today. I won't say it's fairly 15 points will result in MTM swings though. But I can't come closer because at this point of time, I'll rather do an inverted strangle than a strangle. Because again, here there is 17 points, and in inverted also, there is close to 17 points. The way I look at this is I'll create a custom list. So right now, the straddle is around 54 points. I have to do a strangle, then it's 18 points. Do an inverted strangle, then it's again 18 points. Give or take unless I'm at a straddle. The points in strangle versus inverted strangle are roughly the same. Also create a rule here. If it goes to 19, then I'm set. I'm just adding another 30. If it goes above 90. So that's the current position that I'm sitting at. I'm adding another 30 quantity. Looks like I got some on the put side. I got some at 12.25, 12. Have this. This is pretty much it. Just leave one here. I'm going to remove this. Leaving the list here just to get a view of how the premiums are, both in strangle and inverted strangle. We are approaching 230 and the straddle itself is now touching 50. There's no point of having. Make this as -5. That's the maximum that I'm getting. Okay. Let's look at the setting once. The market starts going down, then the puts will, once the put reaches 20, so around 18, this will be around 3, and this will be around 30. So the 21,200 call will be around 30 if the market goes down. I'm going to make it 70. I don't want to bring it to a straddle before 230. So this will result in an MTM swing. So if I look at the panel chart, we had a fairly smooth ride except the first 1 hour. So we right at the beginning we went all the way to positive 27, and then from there we went to -30, and then it was a fairly decent ride all the way to 55,000. From there we are now at 47, 48, 50. not too much of MTM fluctuations. Okay, thanks to the market. So an exit panel will exit your position and you can always re-enter. Whereas an RMS is a one-time setting where you say that, okay, for today, I will stop trading or I will exit all my positions and will not enter again if, let's say, my loss is beyond, for me, if I set this to, let's say, 1 lakh. Right? I'm just giving an example here, and I can't change this after that. So I have to be very careful when I set this RMS. So an RMS limit is basically, I'm saying, if my loss goes beyond 1 lakh, automatically square off all the positions and bring trade flow into a read-only mode. So then I won't be able to take any more positions from trade flow. I can still take it from my broker terminal, but from trade flow, it will automatically square off all the positions and bring this application into a read-only mode. So even if I close and reopen, so if I set this right now, now my RMS is not editable. Once I've set it, I cannot change it. Versus exit panel, I can keep changing it as and when I like. So that's the main difference between an RMS and an exit panel. Exit panel will also exit all your positions, but it won't bring the application into a read-only mode, and you can always re-enter. But with RMS, you can't re-enter through trade flow. Even if, let's say, you re-enter and you open trade flow, then if the PNL is below the RMS limit, it will again square off your position. So that's to protect you from over trading. So you have a choice. If you don't want to set an RMS limit, you can leave it as it is. You can leave it blank. But once you set an RMS limit, it's valid for that day. Okay, what I'm going to do now is just to make sure that my position is safe, right? Because now my concern is that what if there's a big down move? My calls will not compensate. So in order to make sure that I am protected in a 50-point down move candle, I'll move half of my calls closer. That's so, and I'll make a price check of 60, 55. Have a 55, 55 and a price check. And I'll bring half of my calls closer once the calls goes to 40. Right. So in a slight up move, I'm bringing my 1/4 first, and let's move another one. So this way I'm now balanced. So if there's a down move, the 420 call quantity that I have will be able to compensate for the down move. Now the price difference is of no use. Now the only thing is, if the market moves up, then I've kept a price check of 55, so that if there is an up move, these 420 quantity of the calls will risk off again. This will balance my position in terms of if there's a down move or an up move, since the premiums have decayed quite a lot. So rather do this. And if I'm a little greedy, then in the next down move, let's say if I'm sure that the market is not going to go up, then either I can shift this 420 quantity of the call back to sorry, I can move the remaining 51,300 call, which is 570 quantity, move up with a hope that the market is not going to go up. And so if you have to take a directional bet here, the way I would take it is I would bring this call closer and then have a price check of 55. Right now I'm trying to just protect the position in case of a move in either direction. If you're more adventurous, then yeah, a skewed position will give you a better return, obviously, if it works in your favor. And the risk I'm taking, right, is because even if this goes to 55, I have a larger quantity on the put side, which will compensate. So my MTM will not swing. I am protected in case of an up move because I've only moved certain quantity, not all the quantity, and I'll benefit largely if the market continues to slowly go down. Is the MTM percentage still the same? MTM. So I usually ask if somebody tells me that I've made X percentage today, X amount today. Uh, Always look at it in terms of the percentage, right? Because what is the capital deployed, and it's a fairly good return on a capital if you are also using 50 lakhs. I'm very satisfied. It may be low uh, for somebody else, but for me it's pretty good. I'm gonna make this as a 5 tick. Okay to take a slight. We are at a decent return, so I'm taking a slightly more risk than I usually prefer. But this yeah, we are touching the 230 mark. Last 1 hour left in this expiry. One humble request. We have quite a lot of views, but only a few likes. So if you like what we're presenting and you want us to continue doing this, please do like and subscribe. Yes, as you can see, this actually worked in our favor. Right? Uh, it went and touched 55, but since it was a weight of 5, it didn't stay above 55 for 5 consecutive ticks, and hence you can see that the MTM is actually touching 50,000, which is 1% of the capital deployed. Now, if you're more adventurous, this at this point of time, you can bring half of your puts closer. Only if you are somebody who's willing to take more risk, right? Because I'm okay with the ROI so far, so I won't be taking more risk at this. So if this goes below 32, if the call, the 51,200 call goes below 32, then I'm going to bring 1/4 quantity or maybe half quantity to 51,200. But it has to go below 32 for me to bring 1/4 quantity. We'll slowly move. We won't move in a hurry. We still have an hour left. So any questions, any suggestions? Congratulations, Mohit. I think we are thinking alike. Our MTM is reflecting the same. So hopefully it ends better for you than what it's doing for me. MTM so far has been fairly okay. Like we haven't seen too many uh, movements in the MTM. It has been slow and steady, touching the 50-55 mark again. 2 minutes. You can see the calls and puts both have decayed 88 points. From 15, it has gone to 7, and from 12, it has gone to 4. There's a very good decay that has happened. The ATM straddle is under 15. We have less than an hour left. Yeah. Now I'm going to make this as 53. Now if it goes below 30 is when I will move the remaining calls. I will most likely move all the calls from 51,300 to 51. With the chart once. We stayed in a range bound for a very long. Only trickiness will be if it breaks the day's low. So I can do something where I can create a rule and say, obviously right now I'm in front of the system, else I can do something like when 51,200 is less than 30, I want to sell 570 quantity. When it's less than 30, I want to sell 570 quantity. So this is this. Basically saying add more only when it's less than 30. And to square off this leg, I can even say when 51,200 is less than 30 by 570 quantity of 51,300. I'm doing two things. I'm basically saying that when the price of when the option price is below 30, I want to add 570 quantity. But along with that, I want to square off a different leg, which is 51,300 call. That way, I'm shifting my position. Uh, if let's say you decide no, not at 30, I want to do this at 28. Yeah, you can do that. Just change this to 28, and that's how easy it is. Now it will shift when it goes below 28, and it has to go below or at 28 for 5 consecutive ticks. So even if you're not in front of the system, you know that the adjustment will happen. So I started with a straddle today. So my first entry today was at the market open, where I took a entry at 9:15, which is for a so the straddle was about 200 points. So I took a 51,300 straddle. And within minutes, I think it got shifted. That's at 21. I had shifted to an inverted strangle. So within 6 minutes, I was sitting at an inverted triangle, and from there it again became a straddle, then a strangle, then an inverted straddle. So that's how I traded the day so far. But the start was with the straddle. In the down move, it became an inverted straddle. Sorry, strangle. 28 could still be tricky because puts are not gaining. If you look at the put premiums, I will only bring it now when it's below 26. Now I have the flexibility. I should do it when it's appropriate. Right? The put should become almost 16, right? Then me shifting my calls to 26 LTP would be a better risk reward. Up move, I'm not worried because I have more quantity on the put side. It will compensate for an up move. So, and I'm obviously bringing this closer. I'm bringing it lower every time, so that if there is an up move, then my position will respond. I'm pretty much getting 8 points from the other side. Right? I'm taking a bet of 2 points, not more than that. Okay, I'll be back in a minute. Okay. We have a rule which says for 26. Puts are not spiking at all. The worry that I have. Not expecting any big down move though, because I don't see anything, any movement in the puts. The risk is if I bring my calls closer soon, then I may be in a tricky situation if there's a reversal from there. And that's the biggest problem. Only move it when is 1% return good enough? What do you guys think? Let me know. Is 1% good enough for a day? This being a monthly expiry for Banknifty. Okay, we got some hedges exiting there. We've stayed below 50 lakhs throughout the day. Started with 900 quantity, and when I got my hedges slightly closer is when we increased quantity through rules. That's why it's important to just follow these rules, right? So, and a lot of times when we are not doing through a system, it's fairly easy to deviate. Now, I've made a rule, I've left it, and after thinking it through, that if it goes below 26, only then I'm shifting. Uh, versus just randomly bringing it closer and then moving it again away. So it's more of a systematic approach to trading and through rules. And so if it happens, only then I'm adjusting the position. Market is not it's not that we are reacting as and when the candle comes. We have created a rule in advance so that if it happens, I am ready. How many of you seen that? Okay, we see a candle, we panic, and we take an action that we regret later on. For me, that's a very big challenge. Right? Before TradeFlow has been there for over 3 years. Right? So when we started working on it, it was back in the lockdown phase of COVID. That's when I fully committed to building this, and it's been a long journey from there. It's been almost four years that this tool has been used in day out. Publicly, it's been available for more than 2 years now. So for me, the main reason for building this was my style was okay. If there is an up move, sell more puts, shift position randomly without any discipline. With this, there is a good level of discipline saying that if my criteria is met, only then perform an action. Now, I may not be in front of the screen at that point of time. Like, for example, I just went to get a glass of water, but we never know when the candle will come. So if you're somebody who's maybe just struggling with having a decent discipline, try it out for a month, right? You have a broker who's uh, helping us by giving you a 1 month free subscription. And so they are covering for it. You can always try it out, or you can take a trial offer for 9.99 plus GST, where you get 15 days to try out and then see whether it's worth your time and money. But the question to ask is, if you are struggling with discipline in this market, you need, if not TradeFlow, at least something which can help you make sure that you follow the rules and you leave the rules in the system. And only when those criteria are met, you adjust your position. So now I can see that the puts have decayed so much, right? And with TradeFlow, I have this flexibility. I am reading the market and I'm acting accordingly. Now I'm going to make this 48.50. Why should I wait, right? Because the put will not compensate anymore. Puts have given up pretty much 10 points from the point where I started. Now I don't want to risk off too soon, but I don't want to delay it further where it gets it impacts my MTM a lot, right? So that's why I've moved it to 48. And I'm also looking at the ITM and in the money options, right? So this is trading at 36 and this is trading at 35. So obviously the 51,100 is actually trading at discount, or it's actually trading exactly at this synthetic future price. Hopefully that up move should not sustain. Okay, we got some hedges. So by bringing the hedges so close, I've reduced my risk, considerably reduced the risk, and I get another 5 lakh extra margin for me to take a bet. And so here I'm going to take a bet of 51,200 where it's greater than 44. Then I'm selling the 60. So adding more on the call side, and my hedges now are 200 points. If it goes above 44 and stays above 44 for 4 consecutive ticks, I'm adding 60 quantity, but also I have at 48.50 that, and I'm going to change this weight to 1 tick because the puts will not compensate. We have few more minutes left before averaging. That's it. We have like 4 more minutes left before averaging. With that, we are the risk reward is quite high. If the market reverses from here, we have 15,000 and change captured. Let's say if it closes exactly at 51,200 versus we are willing to give 6 points, out of which 4 we can capture from the put. That's the math that I keep on doing. The risk reward in my favor. Let me know if there's any question around this. Now I'm going to make this as 22 because anything less than that is going to be very tricky because I'll be at a straddle in the averaging period. It has to be below 22 for me to even consider coming closer. Because the intrinsic value, so the time value, obviously there's only half an hour left, so there's only 4 point. The deep ITM is actually right at the same level as synthetic future. There's no additional points. It's actually pretty much same price. Obviously, spot is below the synthetic, so we most likely will chase the synthetic. Do you think this is very risky right now? Is this a risky position? Yes, no, not at all. Below 22. Below 22. If it goes, then this is around 7. And we are into averaging now. I'm going to make this below 18, not before that. Because this is currently at the intrinsic value itself. There's nothing left here. So we are into averaging now. At 60. This goes to 44. We can't go beyond 44. There's nothing that will compensate from the other side, right? So not worth the risk. So we're currently using 45, but we've used up to 50. So I'll obviously consider 50 as my ROI. For ROI calculation, I'll use 50 for the calculation. Let's take some 30, 33 if it comes 33. One green candle and it should come to 33. This becomes 40. Okay, slightly different approach now. This is worthless. This 399. I'm gonna square this off. I'm gonna clear this and I'm gonna create a rule for 100 quantity, a 90 quantity, 5 rules, each at 2 rupee and with a weight of. Right, so we're saying we'll add a 30, 32, a 27, and then 27, 28, 29, 30. This could backfire, but I'm completely okay. If we get a red candle, then this is a very good bet. This becomes 36. Start from 26 all the way to 31. But if it goes to 36, we are squaring it. It's a slightly risky bet because if there's an up move, then it would hurt. But we are taking it at better rates. We are not just randomly entering. We are entering at the 26, 27, 28, 29, 30. Okay. The others make 2 point difference. It's how easy it is to just create these rules. Quickly, just change this to 180, clear, hit 4. Now it's going to be 180. 22, 23, 24, 25. Obviously, we've stayed below for a decent while. So I'm going to change this to 33 now. Current averaging is around 216, 215. Market stays as it is, then the average price would be around 18. We're taking entry at 22, 23, 24, 20. We did get something at 22 in this up move. Let's not add more for that. 23. If we go below 50,000, we will call it a day. That's another way of me. We'll be done if our exit is below 50,000 profit. That's only possible if there's a really huge candle on the upside. On the downside, obviously not, because we've stayed above for a long time. We got entry at 24, now at 25. No, no, no. Yeah, good. Good one. Okay. Good done. Yeah, that's averaging is should be this up move. This can be a little tricky. We've said if we go below 50,000, we will square off. It's fine. Not really. We actually try to be greedy, and then looks like around 29 right now here. So if the up move continues, yeah, it's gonna go roughly to 50,000. Okay, by 10 ticks, 10 consecutive ticks for we are below 50,000 for 10 consecutive ticks. That's what for us. Okay, so we had a price check, right? So that price check came into it. Cool. That's pretty much it, right? So we took a slightly higher risk, and the market went up. In that up move, we had to give away some of our gain, which I'm completely okay with. See, without taking the risk, obviously I won't get the reward. I have to take the risk, and but my risk is very calculated. I said I'll enter at higher prices, and we will exit if it goes beyond a certain level. So it went all the way to 33, 34. And to take okay, there's nothing, no point. Okay, I will do something though. What an up move. Very nice. Take the PL as 40. You want to take a slightly 1-4. At 46, 48, 50, and 50. And then start sitting at I was sensing an opportunity there, and that's why I took this because a one red candle will basically result in we've stayed for 10 minutes below the 35 mark. If we go below the 35 mark again, had we stayed in the same position, obviously MKM would have gone to minus 30, to 30,000. It was best to exit at that point of time because we don't know if that up move continues. Then what? We can always add more, but if the time is right, if the price is right. Average price is still around 20. Yeah, we most likely will take back some quantity. Not going below. We'll take back only if it goes to 33. Yeah, has gone quite low though because we got a decent red candle, and if that red candle continues, we will easily get a average below the 22 mark. Okay, it is what it is. Uh, it went all the way to 39.40. Right? We had a price check of 33. Moved away, which is the right thing to do. Not sorry for that. We got something at 27, at 28, pretty good, pretty good. Averaging just around 26. Left. 15 more minutes left. And add more on. Yeah, we are still over a percent. It's pretty good. For 15 minutes, we've stayed above, right? There's a very good chance that they move this market down very swiftly to bring the average below or closer to 51,200. For good 15 minutes, we've stayed above, right? But now, if we stay below, there's a very good possibility of that happening. I will not miss out. Take it at 29. If we get it at 29, we take that. And that's all, because then we are touching the required margin that we thought for. Make it 31. Yeah, there's still some time left. So okay, so they moved the market again up. Right? So it should go below 22, 22. It should stay below 230 at least for us to have a meaningful return on this. 20, anything above 225 is not good for us, proposition. Because we've stayed above 225 for a good 10 minutes. Right? So if you want the averaging to come closer, I think this is pretty much exit these. No point of keeping edges. $45. Now the up move should not continue. That's the challenge that we have. We set 20 days. We'll make it 30. Exactly. So, the up move should not continue. We stay here also. End at this PNL. The risk reward is if there's a red candle, then we benefit quite a lot. We've taken a 4-point risk, which is almost 5,000 risk. For a reward could go up to 10 points. This is a really big, large red candle, then the reward could be 15 points. Doing this only because I have made some money here. For me, I'm going to change this to 45. Just calculating the risk reward here. A red candle gives me a very good return. A green candle, if it stays above, then I lose 4 points, just close to 5,000. So for almost 12,000, I'm willing to give 5,000. I hope that makes sense. So continues. We give okay, last 9 minutes left. If we don't get a red candle now, it's pretty much 30 days. Okay, we're out of the trade. We raised off right automatically. That's why it is very important. And now it's going up to 37, 38. So I don't want to fight with it because that up move is brutal. This is going to bring the average quite higher. Okay, squaring off my position. I think we're done for the day. 46,000, slightly under 1% for the capital deployed. So the PNL was pretty good. I think we touched 65, almost 66, and then in averaging, we got a little greedy and gave up some of those gains. So I closing under 1% though, right? So around 46 and change. So started my day with a straddle, was managing it with converting it into an inverted straddle and then inverted triangle, sorry. And then from there, kind of risked off once when we thought it's not worth it. And then towards the averaging, we gave away I think, roughly 20,000 the averaging. And it's very hard to predict this kind of a move coming in the averaging, especially when the market was showing weakness. So well, I was not expecting this move, honestly speaking. I was expecting one big red candle and the price going back to 10 to 12 rupees. The risk reward was in our favor. That's why I took. Well, any questions, any comments? Right. One last request. It takes a lot of effort, and so if you are liking the content, the live sessions, please do comment, share, and like. Right? Your like is just a thumbs up, right? Just a thumb will tell us that you want us to do this more often, and we will try and do that. Thank you, Mohit. How's your return? Do let me know. We were at the same MTM. So we'll start using it, right? So right now I'm trying to show that with 50 lakh also there is a decent ROI. Right? A lot of people are questioning whether, okay, should we continue doing option selling even with 50 lakhs, right? And honestly, for anybody who's doing more than 50 lakhs, definitely, right? But with 50 lakhs also, there is the decent return possible if you are doing very systematic trading, if you are very disciplined, and if you're using TradeFlow. And so, jokes apart, right? Irrespective of whether you are using TradeFlow or not, right? TradeFlow can help you. Like it helped me. If I had taken an emotional bet, and if I said no, it's gonna reverse, right? I may win a few times, but the day I lose a lot, right? So for me, that's why this helps me a lot in protecting in days where I may lose it because I have a very biased view of the market, or I am not disciplined at that day, right? So for this tool at least helps me. I can't speak for others, but from the feedback that I've received, is it helps us become a better trader because it's all about discipline. Uh, if you are a disciplined trader, the money will definitely come. And this is based on the conversation that I've had with huge number of traders. You can take mark my word on that. Right? If you are a disciplined trader over a long period of time, it will give you decent returns. Any disagreements to that? Thank you, Mohit. Thank you for all the support. I think there's a lot of feedback from the community that we work on, and that's why it is what it is today. It is not possible without all the feedback and the support that we've received from the trading community. So thank you for that, and keep sharing your valuable inputs so that we can keep making it better and better. I hope you had a good expiry. We'll catch you. Uh, Tomorrow is a holiday, so a Merry Christmas and enjoy the holidays. And we'll catch you day after tomorrow, which is for our Nifty expiry. We will come for Nifty expiries. Thank you. Take care. Bye bye.